Thanks for that. I was going to look at that number earlier. I didn't. Well, let's go ahead and get started.
Jerry had a question about when is the price in the MLS open to negotiate where the seller does not have to accept or owe a commission?
Okay. Technically under the listing agreement, there's two different issues here. As between the buyer and the seller can reject any offer that they want to. The issue is, does the seller owe a commission or not? And the answer is, under the listing agreement, if all of the terms of the listing agreement have been met, the seller would owe us a commission, and we could go after the seller for a commission. But remember, as I talked about earlier, you've got to consider who the seller is, what your relationship with them is, and whether you want to retain him as a client. Okay. Now, as to the buyer's agent, the buyer's agent doesn't have direct standing to sue the seller under our listing agreement, but can sue the seller under what's called a third-party beneficiary. So a buyer's brokerage, if they wanted to, could hire an attorney and sue the seller under what's called as a third-party beneficiary to our listing agreement and try to pursue a commission. But as I said earlier, the practical side of it is the costs of the attorney to pursue an action that's not 100% guaranteed that you're going to prevail could be almost, if not as much or more than the actual commission you're pursuing. The only area where we generally see commission lawsuits is commercial transactions, where the commissions are six-figure commissions. You know, now you're talking big business, big commissions. You're not talking about just individual moms, you know, husband and wives and sellers. You're talking about big companies, big commissions. That's where you see, if you look at most of the published cases dealing with commissions, they're almost always commercial cases. They're not our cases, unless you got some seller with deep, you know, you got a party with deep pockets that wants to go after somebody just for the principle. All right. Next document. This is a document that is recommended to use when you've got a tenant-occupied property. This memorializes the landlord owner's permission, seller's permission to put a lockbox on a property when it's tenant-occupied, and then it also has provisions for the tenant to sign permission for there to be a lockbox and/or property to be shown. Now, remember, you still have, you know, this still prevails in any event, whether there's been an agreement, a written agreement by the tenant. This is still the law. One thing I wanted to go back to, there was a question asked about this. And you know, this is used when the listing is when the listing has been canceled or expired. This is when you want to list the buyers who've been shown the property. So it's used when there's been the listing has been canceled or has expired. Tenant estoppel certificate. This is another very important document. And whenever you sell a property that's occupied by tenants, remember, all properties that have a tenant under a lease or a month-to-month agreement have to be sold subject to that tenant's rights under their rental agreement. And currently under Alameda County's eviction moratorium, we cannot vacate, we cannot serve a notice on a tenant just for no reason at all, nor can we serve a notice on a tenant to vacate for a failure to pay rent. You can attempt to evict a tenant for breach of the rental agreement, But if you've got a tenant that's abiding by the agreement, even if they're not paying full rent in Alameda County, you can't serve a notice on them. You've got it, and so you have to sell the property subject to that tenant. I see this problem come up a lot where agents don't understand, you know, that they can't get rid of the tenant. You know, you can't even make your agreement subject to a 60-day notice because you can't serve a 60-day notice. And I remember Alameda County's order is not going to expire until 60 days after Alameda County lifts their county shelter-in-place order. And we have no idea when that's going to happen. The state's talking about September 30th, but that doesn't apply to Alameda County. We still have an order that's in, we could still have an order in place after September 30th, and the moratorium will continue on for 60 days until after that order is lifted. Now, with everything that's going on now, that September 30th date from the state could get pushed out. We'll have to wait and see. This is a document that should be generated by the tenant, and the tenant spells out the terms of the rental agreement, how much deposit they pay, how much they pay in rent, and who pays utilities, and if whether or not they have any outstanding claims against the landlord. The reason we want this document is so that when escrow closes, buyer takes over the property, the buyer knows the terms of the tenant's rental agreement, so that the tenant can't show up knocking on their door and saying, oh, by the way, you know, here's my rent check. You know, I took $100 off the rent because the landlord told me that if I mowed the lawns, they'd give me $100 off on their rent. Well, where is that in writing? Is it in this document? Well, if it's not in this document, it doesn't exist. And that's the reason you want that estoppel, so you can stop the tenant from asserting claims that aren't legitimate claims that they actually have against the landlord. And the tenant should complete it, and then the landlord should get it. The landlord should carefully review it to make sure it's accurate before signing it. If it's not accurate, it should go back to the tenant to be corrected or to work out figure out why there's a disagreement. I've got a transaction right now under the duplex where the estoppel certificate had all kinds of mistakes in it. But it come to find out it wasn't prepared by the tenant, it was prepared by the seller/landlord. The seller didn't even understand the terms of their lease. Didn't even know how to fill the form out, which is a little scary, but in any event, very important. Now, the other thing, when in contracts, I always make a point, when you're selling a property, a tenant-occupied single-family home under the residential purchase agreement, nowhere does it mention that document. You need to make sure you generate that document when you've got a tenant-occupied single-family property. When you get to the residential income, it has a box to check to make sure that's part of the transaction. But that's only when you're dealing with a duplex, triplex, fourplex. Question?
Yeah, under the signature, tenant by what?
I'm sorry?
Yeah, on the signature parts.
Which part?
Tenants by who, by what? By entitled.
That's if there's somebody on, typically that's a property manager. That's for a property manager. Well, both of them are. It could be let's see, there's tenants. I'm trying to think. The other thing is, it could be somebody under a power of attorney too.
So you say we need this for tenant occupied.
If you're selling a property that's tenant occupied and the tenant is going to remain after close of escrow, that tenant needs to complete this document and give it to the buyer. Okay, this next document is a newer document. It's called the Square Footage and Lot Size Disclosure Advisory. This is where if the square footage of the property has been represented in different places as a different number, this is the form you want to use to disclose the different square footages and the source of the numbers. Quite often you can have the tax report will say one thing, An appraisal report may say another. An MLS printout may say another number. So this allows you to disclose all those different numbers as to square footage of the home and or as to the lot size.
Sorry. If the tenant is buying this.
No. The tenant is going to remain as a tenant. Okay, this is another new form. This kind of came around the same time as a lot of the PED forms. This is a form that you can use at open houses to get clients, get the visitors to the open house to put them, if say you have a house that's got recording devices and you want to make them aware that there's recording devices, that anything they say while visiting the house could be heard by the seller, either simultaneously or later on. So you got to be careful. They need to be put on notice to be careful what they say when they enter open house. I've used this in open houses, and most people don't have a problem signing it, and they like the fact that I explain to them that, oh, by the way, there's cameras in here. Keep your mouth shut because the seller's hearing everything you're saying. Don't be talking about the price you want to offer, or bad mouthing this or that. And then it has, then it basically has assumption of risk information with respect to the risks of being in the property. Moving on, this is what we call the Ferpta. This is the withholding affidavit. One of these documents needs to be signed by each seller, not just one. Each seller needs to complete an affidavit stating whether or not they're a non-resident alien for income, U.S. income taxation, and then indicating that a qualified substitute, which is normally the escrow officer, will be the one receiving an affidavit from the seller with the seller's social security number, such that there will be no disclosure to the buyer of the seller's social security number. That's what this form is saying. Because under the old forms, the social security numbers of the sellers had to be on the form and they had to be given to the buyer, otherwise they were incomplete. Now we rely on the escrow officer as a qualified substitute. Buyers out there is under federal law, there is no withholding whatsoever if the property is going to be buyer's principal residence and the price of the property is $300,000 or less. Not going to find a lot of single family homes around here for under 300. There were back when I started selling real estate 31 years ago, but not around today. Okay. And now we're in the disclosure section. And I'm not going to, I know Pat just taught a disclosures class. I'm not going to spend a lot of time on disclosures. You should be familiar with them. If you're not, ask for the link to her class and listen to her probably 2-hour class on these documents we're going to talk about. This is the transfer disclosure statement. First page. This is page 1 of what we call the agent visual inspection disclosure, or the AVID or AVID, depending on how you want to pronounce the A. Remember, both agents, seller's agent and buyer's agent, have to do a diligent visual inspection of the property, and this is the document on which you memorialize your findings under as part of your visual inspection. And you see up on the top here the box. If it's a multi-unit property, you check that box, and then you identify each unit. And I have a duplex that I represent buyers, so I had to do 2 visual inspections, one for unit A, one for unit B. SPQ, this is the first page of the seller property questionnaire. This is a 4-page disclosure that all non-exempt sellers are required to complete pursuant. This was not required by statute. This was required by the purchase agreement. Another document that's provided is a notice regarding water conserving plumbing fixtures and carbon monoxide detector. The date you want to remember for water conserving plumbing fixtures is January 1, 1994. Any plumbing fixture sold after that date is water conserving. So when you're talking to a seller, you ask them, when depending on, assuming the house is older than 94, when was the kitchen remodeled? When were the bathrooms remodeled? Was everything replaced? Toilets, faucets, shower heads. That's what we're talking about. In kitchen and bathrooms. And they would check the box accordingly on the disclosure. Carbon monoxide, it's not technically a point of sale ordinance, but if the seller doesn't install one, the buyer can sue the seller for up to $100 for the installation one after close of escrow. So it's a good idea to have your seller put in a carbon monoxide detector just to avoid that whole hassle and deal with a possible lawsuit. This form no longer is in zip forms, but I just wanted to make you aware of the other disclosure that's required in all transactions, which is a natural hazard zone disclosure, the $99 report. And one document in that disclosure package is the actual statement identifying where the property is in an earthquake zone, special study zone, high fire hazard area, or flood zone. Okay. This is the document that provides for sellers and buyers receipt of the environmental hazards booklet, earthquake safety booklet, and mold and home energy rating. So we have a combined booklet. It should be given to the seller for the purposes of them to prepare their disclosures, and they should be signing the receipt, having received it, and then it's given to the buyer, and then there's a receipt by the buyer of having received those same booklets. And now, we used to pass booklets out. Now they're all available online. It's one big soft copy of the whole entire booklet. Yeah.
So it is a zip line, but it's not in the zip forms?
No, that statement's not in the zip form because it appears in the report. When the NHG report comes, one of the very first pages of the report is the statement, and then the seller has to sign the statement. The statement's required. It's just not, we don't generate it in zip forms. It's generated as part of the NHD report. I just included it in there just to show you all of the disclosures that are generated, but it's not a zip form anymore. But that statement is required, has to be signed by a non-exempt seller. An exempt seller doesn't have to sign it, but a non-exempt seller does. Lead-based paint. Lead-based paint disclosure applies to properties built prior to 1978. So there's another date you got to remember. You got 94, now you got 78. Pre-78, lead-based paint's required by federal law. No exemptions, applies to any property regardless of seller status. Residence earthquake risk disclosure statement. This form here is comes from zip forms. It's in zip forms now. It wasn't for a long time. This applies to properties built prior to 1960, 60. Now there's another date you got to remember. Got 94, 78, and 60. Now this is not required of an exempt seller. The next one is called the new fire hardening and the fiscal space advisory disclosure and addendum. This one's fairly new form. Actually, this form actually went in effect for all escrows closing as of July 1st of this year. So this form applies when the property is in a high or very high fire hazard area. So the first thing you do is you look at your natural hazard zone disclosure report. Is it in a high or very high advisory area? If it is, then this form has to be completed by the seller. Well, the next thing you have to do is you've got to determine who has jurisdiction over this property. Is there a local ordinance, be it a city or county ordinance, or if there's no local ordinance, then it's likely falls under what's called a state responsibility area, which means CAL FIRE has jurisdiction over that area. If it has the reason you've got to disclose to the buyer that either it falls under, it doesn't fall under any local ordinance, but it may fall under state. And then what the buyer agrees to is that the buyer has to go have an inspection done to confirm compliance with the defensible space laws within a year after buying the property. And they're either going to go to the local entity if there's local jurisdiction, or they're going to go to CAL FIRE because it's state responsibility area. I have a listing on Palomares Road in Castro Valley. Castro Valley is an unincorporated city within Alameda County. I confirm with Alameda County. Alameda County has no local ordinance. So it falls, and the NHD report even states that it falls under the state responsibility area, which means CAL FIRE has jurisdiction. So whoever buys that property within a year of moving in, they will have to bring the property into compliance with the defensible space laws and have CAL FIRE come out and inspect the property and certify that it is in compliance. And that's a new law that just went into effect as of July 1. I'm drawing a blank on one of the cities. As of right now, it's my understanding that there's only 2 cities in the state of California that are requiring to have a defensible space law. One is Truckee, go figure. And the other is in, and I'm drawing a blank on, I just heard it the other day. The other one's in Marin County. And I can't remember now the city. There's a city in Marin County that's required. You may, as things progress with these fires, you may hear of more. I'll just share one other little tidbit with you. If you're not aware, properties in these high and very high fire hazard areas are subject to very, very expensive homeowners insurance premiums. I mean, we're talking in the tens of thousands of dollars in some cases, $10,000, $20,000, $25,000 for insurance for 1 year. Okay. So just some food for thought, especially if you have a client who's going, oh, I'd love to live up in the mountains or in the woods or up in Tahoe. You're going to pay a lot of money for insurance to live in those areas. A lot more than you ever would have before. Now, you've heard me talk about exempt sellers occasionally. Who's an exempt seller? I told you in the beginning. Were you listening? You remember? Who are the exempt sellers? I didn't mention them all. I just mentioned a few of them. Okay, exempt sellers when the owners have passed. So you've got a trustee of a trust after the former owners have passed. You've got someone died without a trust, but they had a will, and there's either an executor or an administrator handling the estate. They're exempt from most of the statutory disclosures. You have if you had a property that's gone in bankruptcy, and you've got someone representing the estate in bankruptcy. If you've got a property that went through foreclosure, an REO, they're exempt. So what they're exempt from are most of the statutory disclosures. They don't have to provide a transfer disclosure statement. They don't have to provide the seller property questionnaire. They do, however, have to provide water heater and smoke detector statement compliance. Okay. That form is not needed in a non-exempt transaction because the TDS well, it's not, it doesn't show up on this page. At the top of the next page, the TDS has certifications by the seller that the property is in compliance for water heater and smoke detector. It appears in the TDS. So in a normal transaction, you don't need this form anymore, but you do need this form with an exempt seller. A seller not providing a TDS means you've got to provide that because they still have to comply with water heater compliance and smoke alarm. Okay? Is everyone aware of that? Understand that? I mean, everyone's aware that the seller has to provide, otherwise has to comply with that. Well, in an exempt seller situation, we're dealing with a trustee, an REO, an executor, an administrator. This is what you're going to provide along with that exempt seller disclosure. You notice here on the exempt seller disclosure, see all the questions on the front page? It just happened to be the same questions on the front page of the SPQ. So those questions are all the statutorily required questions. And that's why they still have to be answered. And the major ones are, has there been a death on the property within the last 3 years? Has there been has anybody been running a meth lab on the property? Fortunately, we don't have to deal with a lot of that around here. Any insurance claims within the last 5 years? Those are some of the questions. But so those questions are in the SBQ, and they're the same questions that are in the ESD. Remember, so, but you don't have a TDS, but you still have, I said I wasn't going to spend a lot of time on it, you still have to provide these. Each agent still does their AVID. So you have an ESD, you have AVIDs, and you have your water heater. The thing, what I recommend you do, instead of trying to remember everything I'm telling you now, is go to this. If you haven't gone to the CAR website, go to the CAR website, go to the legal link, and you will find a link to disclosure charts. And then they'll have a disclosure chart that across the top lists every type of property. And then along the side in alphabetical order, it lists all the disclosures. And then it tells you yes or no if the disclosure is required for that particular type of property. It's about a 8-10 page checklist chart. So I strongly recommend that you go to that site. I have for a long time, I had a copy printed out in my briefcase with me before I had a laptop. And I constantly would refer to that. I still refer to it to this day. Even though I think I know it all, I will still, just to be careful sometimes, if I got an unusual transaction, I'll go back to that chart just to make sure I'm not forgetting something.
So
Make
it's
sure.
in the CAR.
It's in the car.org website. Go under legal, and then you'll find disclosure charts. Okay, one thing we do that you may not be aware of is or at least we should be doing, is if we sell a property that we've ever handled before as a buyer or seller, and we still have the file in our records, then we pull that file and all the relevant disclosure documents from that file get produced to the new buyer as part of a historic disclosure. This is the form advising the seller that we're going to do that. This is the form where you list all the documents that we're generating. Typically, what happens is if it's a hard copy file, it gets pulled and it's given to me, and then I go through it and pull everything out and say, all right, here's what to put in there, and I include everything: preliminary title report, all the disclosures, NHD, anything that would fall within any sort of disclosure is given to the buyer. Because what's happened is plaintiff's attorneys have got smart, and they've realized that if a brokerage handled a transaction before, then their argument is the broker, have constructive notice of what's in all those closed files. And that can use that against us to try to hold us liable. So we now, because of that claim, potential of that claim being made, we provide them with everything from those old files. So they can't use that argument against us. I put this in here just to let you know, as we had the seller property questionnaire earlier, the SBQ for a house, condo, townhouse, we have the same document for vacant land called the seller vacant land questionnaire. This I put in there. We generally rely on the escrow officer we advise them if there's an HOA, then they request documents from the HOA, but there is a form where the seller can actually make the request direct if it was necessary. Was anybody on that class today that I sent the information out on?
You're gonna send it out.
Oh, it didn't go out. Okay. You missed a good class. Anyway, I just want you to, this is a good form. This is a good form to read so that you're aware of what a HOA has to provide. And remember, the seller has ultimate responsibility. There's two other documents called the HOA SN and HOA RN. One shows everything that's statutorily required. The other one shows everything that's required for the contract. Moving on, buyer rep agreement. Now we finally finished the sellers. Now we're switching to the buyer. So this is the buyer rep agreement. This would be the equivalent of a listing agreement, but you're entering an agreement with the buyer. Buyer material issues. When you have that initial consultation, one of the questions you want to ask the buyer is there anything about is there anything material about a potential property that you may buy that, you know, that I need to know? Is there any issues that are important to you that if you were aware of that issue, you may not want to buy the property? That's what we refer to as buyer material issues. And to memorialize that conversation, you document on the form, this is material to the buyer. Not now.
Do you have an example for the material issue?
You could have child has allergies. So you might be sensitive to, you know, homes with carpeting. Maybe there's, you know, references in the disclosures to maybe there's been mold in the house.
So will the like a railroad or impact consider?
Yeah, that would, yeah, if they, yeah.
Material issue.
Yeah. See, again, you use this document to defend yourself in the future should you be sued and they claim that, you know, you did not, you know, you didn't consider the material that you didn't consider something as being material to them. Well, did you mention it in here? No. Well, then, see, we use this against them to say, well, during our discussion, during my initial consultation, you never brought that up as a material issue. You mentioned this, this, and this, but you didn't mention that. See, that's what you do to prepare this document. Okay, estimated buyer cost. This is the same as the seller's net sheet. This is the same thing for a buyer, where you're estimating how much money are they going to need to close escrow? How much are they going to need for, you know, in addition to down payment, how much are they going to need for all the closing costs? Now, we generally don't do this much because we rely on the loan officer to give the buyer a good faith estimate. Well, the good faith estimate by a lender has most of the fees, but it's not complete, and it doesn't have everything, and it may not take some things into consideration, certain expenses into consideration. One in particular is city transfer tax. They may know what county you're going to move into, but they may not know what city, and the city transfer tax could vary anyway from $3.30 up to $15 or more, 1,000, and that's normally split 50-50, but that can amount to a lot of money. Now you can go to the escrow officer and say, give me a settlement statement, give me an estimated settlement statement based on this price, this loan amount, this close of escrow date, and if you can give them an interest rate too, they can generate a somewhat complete statement, but they don't have all the lender fees. So either one of those parties can give you a statement, but neither one of them can give you a complete one. The reason I'm making a big deal about this is you may have a buyer. See, part of the problem too is, as I said before, properties are so expensive. People make so much money. A lot of people don't care about these details, but you may have a first-time buyer who's scrimping and saving and trying to put together every penny they can to buy a house. You need to know how much money is it going to take for them to buy this house, and do they have enough? And in that situation, you've got to prepare this document. I used to teach classes on this because we had to do them. You couldn't even start showing a buyer property without knowing whether they're going to have enough money to buy.
Carl Medford said he does something similar with this. With every buyer, they go through, figure out their exact amount that they can go up to a max of. So then
exactly,
they know what they're getting into.
Exactly. Yeah. Exactly. You got a first-time buyer who only has a certain amount of money, and you get them pre-approved, and now you know what their purchase price is, and you know what their loan amount is. But and now they may not have provided full documentation to verify cash. You know, a lot of times they'll go, "Oh, don't worry about that. We'll figure it out." You know, it's like you may need to really fine tune it. You take the veteran. You're trying to do a no down VA loan, and you got to figure out how much are the closing costs going to be, and then are we going to, if we can find a seller to accept the VA contract, because remember, the VA's got to have a Section 1 pest control certification and a roof certification. Well, a lot of sellers aren't willing to do that. If you can find the right sellers willing to do it, well, you might be able to inflate the price enough and hope it appraises to get the seller's closing costs paid for. You can literally do a VA deal where there's zero money coming out of the buyer's pocket. The challenge in this market is finding the seller willing to deal with it better.
When do you use the BMI form, the previous one?
Initial buyer consultation.
Okay. So with every buyer?
You should.
Okay.
Or at the latest when you're writing the offer.
Okay. So with every buyer.
But see, you should be asking about material issues before you start showing them property. I mean, there could be a lot of things could be material. The schools, the location. I don't want this. I don't want that. You know, those are all material issues, and you want to document all that.
But is it mandatory?
Not mandatory, but it's best practice.
Are we liable by providing this form to them?
No, you're not liable. You're going to be liable for not providing it and having them come back, and you can't document the conversation. See, the only way you're going to prove a conversation is with a piece of paper. Otherwise, it's he said, she said, or she said, she said. That's the reason for all this paperwork. It's your proof that a conversation took place, that a buyer did or didn't do something based on what's been memorialized in writing. That's why we do these forms. And I'll explain a couple other situations here in a minute when we get to the forms.
Just a quick, Steve, if they pick up they want a school district, right, with like 8 ranking or something, and then they decide to go with 2 ranking, decide to go with private school, how would you? You would memorialize that conversation. You would memorialize that they have decided to do something contrary to what they originally stated in that BMI form. And which one would you use?
You could do that in an email. You could just type a letter.
Okay.
Any kind of written documentation just to show that, you know, this is just to confirm that you've chosen to buy a property, with a private school, private school, which is contrary to what you originally stated in your BMI form. Any kind of written evidence that conversation took place. It could be in a communication log. You know, you should be keeping a communication log of your significant conversations. You can put it in your log. I had one case that I basically settled for peanuts, but the case all turned on a one-line entry I made in the inside of my file before they walked out of a sign-off. Okay. We made a copy of that and gave it to my attorney, and we just shoved this in the buyer's face and said, "You're going to lose if you want to keep going." We got out for peanuts because I had it documented what it said. Was there a hand?
Julie,
Yeah. So like we provide those numbers for our buyers, and what if when they close, they find out the numbers
It's
don't
an
add up?
estimate. What's it say on the top?
Okay, yeah.
Estimated. And it says it again at the bottom. These are estimates. Okay.
I have one other question about, Teresa has about the material issues that I think is pretty good. What's the difference between a material issue and just a preference? Like, how do you kind of distinguish something that they say, yeah, this is a problem versus it's not?
Well, I mean, material is such that it would cause them either to buy or not buy the property.
Okay, so like a heart, not a preference, but like
right.
This is a no-go item.
Yeah.
Okay.
I mean, they could tell you, we don't want to deal with anything that's got foundation issues, or we don't, it could be a number of different things that could be material to them. Notice of identified properties. This is, again, this is for a buyer rep agreement where you got a cancellation and there's protection clause in the buyer rep agreement and so forth, and that's what this is for. Termination of buyer agency. If you're in a situation where you've been working with a buyer and you need to memorialize termination of that relationship, that's what this form is for. don't see it used that often, but that form does exist where there's a situation where you need to memorialize and one of the agents saying a transaction is no longer involved in that transaction for one reason or another, or you're just flat out terminating your agency with the buyer. Okay, now we're on to the purchase agreement. Now remember that this is what we call the RPA, residential purchase agreement. This is going to be used again for single family home, condo, townhouse. If there's an ADU that isn't tenant occupied, perfectly fine to use this as well. Just remember, there should be, you know, two visual inspections of each unit. If you got a manufactured home, separate purchase agreement. Then there's a special advisory that comes with manufactured homes. I think that prints out automatically when you do you can pull up that agreement. You've got new construction, residential income, new construction, residential purchase agreement, and joint escrow instructions. So this is for a residence that's to be constructed by close of escrow. So it's a new construction, but it's not done yet. This is the agreement on which you write an offer. And then there's a disclosure that accompanies that new construction. And there's an addendum that addresses the new construction, and it talks about the methods that have to be taken to pursue a construction defect case as a result of being new construction. And now you've got probate purchase agreement. Remember I mentioned earlier, if you've got a probate sale, it's not a trust sale, you've got a death, you either have a will with an executor or you have no will with an administrator, then more often than not, probate purchase agreement is going to be the agreement you're going to use. One of the questions you're going to ask is court confirmation required? Residential income, mentioned this earlier. Duplex, triplex, fourplex. This would be your form. It's got more provisions. All these contracts pretty much have follow the same kind of format, but there's additional requirements of the seller with residential income. They have to provide copies of rental agreements, P&L profit and loss statements. There's other information that has to be provided by the seller of a residential income because they're a landlord and there's more documents and they're all listed in the agreement. That's one of the reasons why you use this and not the standard agreement, because none of that stuff's in the standard agreement. You have a vacant land purchase agreement, and you've got an additional inspection advisory as to vacant land. And you have what's called the notice of default purchase agreement. We don't see this too much right now, and hopefully we won't going forward, but you have to remember that if you represent an investor, when I say investor, that means someone who's not going to own or occupy the property. And they're going to make an offer on a single family, 1 to 4 unit property occupied by the owner and subject to a notice of default or potentially notice of trustee sale. If those 4 elements apply, you have to use this agreement. There's significant legal consequences for not using this agreement. And part of the reason is because in that situation, the seller has a 5-day right of cancellation after entering into a contract by law. And you have to notify them of that when you make an offer to a seller who's in default. So remember, 4 elements: investor, single family 1 to 4 unit property, owner occupied, and a notice of default has been recorded. Remember, notice of default is step 2 in the foreclosure process. Step 3 is a notice of trustee sale. So if at least a notice of default or a notice of trustee sale have been recorded and you're writing an offer, you've got to use this agreement, the non-POP. One of the things you have to sign is, as the licensee, you have to declare that and prove that you have a real estate license when you're writing the offer. That it generates automatically. And this is the notice of cancellation that is given to the sellers. See how bold, how big and the bold the font is to make sure the seller is aware that they have the right to cancel. Moving on. Now you can have situations where one of the principals, either the seller or buyer, may not be represented by an agent. Let's say you find a FSBO for sale by owner, and the FSBO thinks they know it all and wants to represent themselves, but is willing to pay a buyer's agent's commission. This is the form you would make as part of your package. Seller's not represented by an agent. You got the reverse. You got a buyer who thinks they know it all and wants to represent themselves, and you represent the seller. You got a buyer non-agency agreement. Very important. You want to memorialize whether or not that party is represented by an agent. All pretty self-explanatory. Again, we got the same RCSD for the buyer. Buyer could be, yeah, real important. You know, a lot of people have trusts, and a lot of people, you know, when they want to buy a property, want to take title as trustees of the trust. Most lenders are good about it now. Most lenders will allow trustees to borrow money as trustees. For a long time, they wouldn't. You had to deed the property out of the trust, get the loan, close the deal, and then close the loan, and then close the deal, and then transfer the property back to the trust. And sometimes that transfer didn't take place, which is bad news. Nowadays, most lenders will accept a certification of trust and allow the buyer to borrow as trustees of the trust. Again, so that would be memorialized there in 1A. You might have an investor that may have an LLC set up and would be signing on behalf of the LLC, or may have a corporation, typically LLC, sometimes and or a partnership. Could have buyer signing under power of attorney, and you could have an estate. Possibly buying a property. Okay. Sbsa, Statewide Buyer Sale Advisory. This should be a part of every offer that you write. It's not a disclosure. It's not a seller disclosure. It is an advisory to the buyer that should be part of the buyer's offer. I believe if you write an offer correctly without a bunch of extra stuff, it's going to be, I believe, 57 pages. You represent a seller and you get an offer without the box check and without this document, you need to issue a counteroffer, and you need to include that in your counteroffer. And this form, if you're in Alameda County, should be referenced on the last page of the Sbsa. This should be referenced under local disclosures. You should list that document in its title, and that needs to be included. Remember, this document is 14 pages. Now, the purchase agreement's 10 plus some extra stuff, about 15. That's 14. That's another 22. Someone asked, what do we give to the buyer at our initial consultation? You give them the purchase agreement. Now remember, you can print forms out and have the word sample superimposed across the form. Are you aware of that? Say yes.
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 You are now. Okay. You can print it out and it'll print sample in big letters across the form so they can't use it in a real world. You should give them the purchase agreement, give them the Sbsa, and if there's a county specific disclosure, give them that too, because that's part of the Sbsa. Alameda County has one, Contra Costa County has one, and I'm pretty sure most of the other counties have them. San Francisco has them. They almost all have them now.
But do you have to give the market advisory?
Yes, you should give the market conditions advisory to the buyer as well. I showed it to you on the seller side, but yeah, you should be giving it to the buyer also. And yeah, that's a good time to make them aware of what to expect going forward before they even start looking at property. Because it talks about non-contingent offers, multiple offers, all that stuff. See, folks, there's so much you can get out of the way in a buyer consultation such that you don't have to spend as much time when you're writing an offer for them. Kind of depends on where you want to spend all your time. It's when you go to print. There's a drop down and you have to print. You have to designate print sample form. No, CAR, zip forms. Where was I?
What did you say about an addendum if the Sbsa was not provided?
You put it in your counteroffer. What I do on the counteroffer form, let's see, it's too far in there. I don't want to explain that. In the counteroffer form, there's below the body where you write in the terms, you can check boxes to incorporate additional documents. And so I check those boxes and I put statewide buyer and seller advisory. Now, I referenced the Alameda County in the statewide, so I don't have to repeat that because it's part of the statewide. But if I have any other document that was left out, I reference it there in the counteroffer. And that's part of my counteroffer. So I quite often will have a 37-page counteroffer to the buyer because they left out those forms. See, we want insurance and guarantee that those forms are in the buyer's hands at the time they write an offer. Yeah, there's disclosures IO and all that, but we want proof that we gave it to them at the time they made their offer. Because the clock, if there's any contingencies in that offer, the clock starts ticking upon acceptance. And we want them to know what they need to investigate before the contingency period expires. Now, here's the other thing, folks. How many people have read that completely? All 14 pages?
Don't even know it exists.
How many people have read that one? All 22 pages. You cannot sell real estate. You cannot represent a seller. You cannot represent a buyer in the state of California unless you have read these documents and know what they say. There is so much in there that's relevant to listing a property for sale and relevant to the disclosures that need to be made. Same for this. There is you will learn so much when you read these two documents. It'll blow your mind. Okay, because there are so many things and you're totally unaware of. You don't even you wouldn't know if it was an issue if it hits you in the face, but you'll be aware of it when you read these documents. I can't stress upon you enough how important it is to read them. They have so much information. Now, if you're going to make an offer that's contingent on the buyer having to sell their house, this is the form. Again, this is not a simple form to fill out. The time to figure out how to fill out this form is not when you're sitting down with your buyer preparing an offer that's due by 5 o'clock. Here's what you need to do. Well, let me take you back to 31 years ago. I practiced law for 7 years. I didn't do real estate. I represented brokers in malpractice cases, but I didn't do real estate sales. What do you think I did as soon as I got in the business? I started reading every single form that was available because I knew I had to start using those forms. I never stopped reading it. But you need to be doing the same thing. This form is a complicated form. It's changed once, some cases for the better, but it's still complicated for a lot of people. You're going to have a situation where you're going to have the market. The market will be such that your buyer will be able to make a, quote, contingent offer, contingent on a sale of the house you're selling. You need this form. You need to review this form before you start to try to fill it out. because you can get your buyer in a world of trouble if you don't fill it out right. If you have a seller who wants to make an offer contingent, a contract contingent on them finding a replacement property, this is the form. Now, put yourself in a buyer's shoes. Would you like the seller to have the unilateral right to cancel the contract if in 17 days they can't find a replacement property? Probably not. So you got to kind of pick, you got to have the right buyer who's willing to hang in there with the seller. Now, the other issue is, when do all the time periods start? Do they start on acceptance, or do they start when the seller serves notice that they found the replacement property, the contingency has been satisfied? Because remember, does the contract say upon acceptance, put your deposit in within 3 business days, your contingency periods all start, which means you're going to have an appraisal done for within 7 to 10 days. You're going to spend money on that. Do you want to do all those things knowing the seller hasn't found a replacement property yet, and 17 days from now might cancel the deal? Okay, well, you have a box to check so that that takes place. There's options in the form. It defaults one way, and then you check a box for it to be otherwise. Okay, this is one that you may not run across a whole lot, but this is one of those examples where if you start writing out an addendum for inspections for a septic tank or a well or property mounting or propane, you got to stop and go, wait a minute, there's a form that addresses everything. You don't have to make anything up. It's all here. Everything that's relevant to septic, and I've done it all. Everything that's relevant to septic, done well, property mounting, propane, it's all there. I just closed a transaction in Brentwood where we had septic. We didn't have septic. We had well and propane tank. I have a listing right now where we have a septic well, we have septic well and propane. Not likely the buyer will need to have a survey done, but we've got the other 3 covered. Again, what I was going to say earlier is, this is what I forgot earlier. The minute you recognize that your buyer may be considering a property that has special circumstances or special equipment, in other words, it has a well, or it has a septic tank, or it has a propane tank, there's something unusual about it, you need to grab, or they want to make an offer, they need to sell a property. As soon as you hear that, you need to get that form and start studying it. Because remember, the other thing you've got to do, if the seller hasn't already obtained the inspections, you've got to go find an inspector to do the inspection you need, and within the time frame that you need it done. Now, on the property I have, Castro Valley, on Palomares Road, we've already done the property, the pest, the roof, the septic, the well, and the pool. I have 6 inspections. In fact, I can't even tell you how much money the seller spent on inspection reports. Several thousands of dollars. We've already done all 6 pre-sale inspection reports, so they're all done for the buyer. The buyer doesn't have to go out and do them. But you'll run across properties where they've done nothing. And you got to have all these. So you're looking at a lot of inspections, a lot of money. It all starts adding up. You know, $950 here, $975 there, $500 here. It starts adding up. You can get, I'm thinking off the top of my head, those 6 inspections are somewhere, I think, in the $3,000 to $4,000 range, if I remember right. Now, the property is listed for $3,950,000, so you don't have to feel sorry for the seller, but still a lot of money to put out for reports. Court confirmation addendum. Remember, we talked about probate sales, court confirmation. You can have court confirmation if the seller is in bankruptcy. Basically, what it is it's you have to obtain the trustee's approval for the sale. A bankruptcy trustee is not going to care about the sale of property if there's no equity in the property in excess of the homestead exemption, which could be depending on age and marital status, could be as high as, last time I checked, 125,000. In other words, they can own a property, and if they have equity, they don't have equity in excess of 125,000, depending on age and marital status. There's no money for the bankruptcy trustee to use to pay off unsecured debt. So they'll approve the sale. And that approval can usually, with a local bankruptcy trustee, the last time I did one, they were still using a fax machine, but I had an approval from the trustee within 24 hours. This quick. So all you do is you send them the contract, you send them a settlement statement. They look to see how much equity is in the property. They go, oh, nothing there for us. You get an approval the next day, and you move on. But you got to make sure your contract is subject to that. Seller financing addendum. You know, anybody ever hear of seller financing, or what's called a seller carryback? Now, if you have a property that's free and clear, the seller can carry the first loan. Now, if the buyer is getting a loan, getting enough to pay, getting a loan, and the seller's existing loan can be paid off, the seller can carry a second. Anybody ever hear the phrase 80-10-10?
Yeah.
Okay, that's where the buyer's getting a first loan for 80% of the purchase price. They're putting 10% down, and there's a 10% second. That second could be by the same lender, could be a home equity line of credit for that 10%. That second could be by a different lender. That second could be by the seller, if the seller wanted to carry. Now, sometimes you have a seller who owns a property free and clear, has huge capital gains consequences, doesn't want to pay the capital gains tax, and wants to carry the loan so that they can drag their taxes out over the life of the loan. Sometimes when you see a sale, and there were comments remarks ago, seller wants to carry the loan. It's for tax reasons. Now you can get, sometimes you might be able to negotiate a pretty decent interest rate, which might be a good return on the money. I've got a deal right now. I've got a property that's likely not going to qualify for a loan. Or siblings inherit a property. I explained to them, our best bet, short of a cash buyer, is you guys carry the loan. As long as the buyer puts up, say, at least 20% down, get you a decent interest rate, because you're going to get the money anyway. What are you going to do with the money? Where are you going to put it? Why not get interest on, just get an interest on a note secured by the property? Not a bad investment. Now, you've got to remember that if you have a property free and clear, just depends on how, it depends on the circumstances. Loans can be assumed, but quite often than not, if the loans have been there for any length of time, the interest rates are much higher than current rates. So there's no big benefit to assuming an old loan with a high rate. There's a benefit to assuming a loan that has a low rate, lower than now. We don't see that much. Back when rates were higher, we had a window where there was potential for a lot of assumptions, but most people weren't even thinking about it or doing it when they really should have. Again, this is another one of those documents you don't just pull out the last minute and fill out. A lot of boxes to check, a lot of things to know. I teach a class on that, but how often do we use it? We probably haven't had one in the last 5 years that I can think of. Now, I may have one here pretty soon, but we generally don't do it that much. And don't worry about that. Now, we talked about 1031 exchanges earlier. In order to satisfy the Internal Revenue Code with respect to 1031 exchanges, if the buyer or seller is going to do a 1031 exchange, there needs to be this intent to exchange supplement in the contract. The accommodator will ask for a copy of the contract and will want to see that document in the contract. I use Starker Services, and I know they're a stickler for that. They always ask immediately, does the contract have an exchange supplement? That's required by the Internal Revenue Code. So if your buyer's in an exchange, let's say your buyer's already sold a property, now they're doing the replacement, you can include this in your offer. Go the other way, if you got the seller, it's just starting out, has huge gains, wants to defer those gains, got to do a 1031 exchange. You got to make sure that's part of the contract. Now, this form is no longer in zip forms, but it's in your, I put it in here for a couple of reasons. One is because I'm starting to see some agents asking for pest control work, asking for Section 1 pest control certifications. A lot of you still like to use the word clearance. Clearance is a word that the lenders came up with. The correct terminology is certification, Section 1 certification. I put that in there so that you've got verbiage in the event you wanted to add a Section 1 certification to an offer or in a contract, you rely on the verbiage in this form. The way the zip forms is set up right now, it's addressed in the request for repair. In other words, it's set up now as if it's not part of the original offer, but it's part of a subsequent request for repair. That's how it's set up in zip forms right now. And there's nothing wrong with that. But I think in this market, if you're going to expect a seller to do a Section 1 certification, that seller should know right up front as part of your offer. So that's why I recommend relying on that form to make sure you've got it's worded correctly. Because there's a whole bunch of stuff that can go wrong if this isn't, you don't have the right verbiage. You know, and I've had that cross my desk on occasion, where there's a one-liner in the contract. It's like there's so many unanswered questions you can't figure out what to do. What page are we on?
87.
87. All right.
121, and you got 10 minutes.
Okay. Buyer's inspection election. This form, you should be completing this with your buyer at the time that you write their offer. Now, when you say there's a high percentage of sellers who are providing you with a pre-sale disclosure package, they're using Disclosures.io link, they're uploading disclosures and reports, inspection reports, yes, no. I do it on every single one of my listings and been doing it that way for over 10 years. Now, I know on your side of the hill in Pleasanton, they're about 50-50 still. Pleasant, Livermore is still slow. They're about 50-50 on doing this. I have no idea why they haven't caught on to the benefit of doing it, but they're not doing it. My point is, you're sitting down with a buyer, the seller's provided you with all these inspection reports, you're deciding, one, are we going to write a contingency or not for investigation and further inspections? And then two, if we are, what inspections are we going to do? This form allows you to memorialize which that discussion and the inspections your buyers decided they want to do. It may be that the seller only did a pest. I see a lot of times where agents do pest control inspections and that's it. They don't do a property inspection. Well, in that scenario, then I would have the buyer check, one, they want to do a home inspection. And now I'm memorializing that they're wanting to do that. And you can go through every single one of these. Now, if you look at now let's say you have a property inspection. It may recommend further inspections. Well, this lets you memorialize the further inspections you're going to do based on your review of the property inspection. Does that make sense? So this is at the time of the offer. This memorializes what inspections the buyer chose to have when the offer was written. Now, when it comes time to remove, let's say, one of two things happen when you write the offer. Either you've removed the investigation and inspection contingency. And if you have, well, then the buyer has waived the home inspection and the pest inspection, if they exist, and additional investigations. And you should have a waiver form signed at that point in time because they have waived doing any further inspections because they removed the contingency. But if they haven't removed the contingency, this form needs to be completed prior to removal of the contingency. So you have documentation that you discussed these inspections. You discuss the fact that they recommend further inspections and they've elected not to do those further inspections and are waiving it. It doesn't stop there, because we've had to take it one step further, because this form only talks about home and wood. It doesn't talk about all the other inspections that this document talks about. So we now have, I know a lot of people don't like the extra paper, but we now have a waiver as to all of the inspections that are in the election form. Why? Because these are the inspections that can come back to bite us. I sat in a mediation one time, one of our aides, and the issue was drainage. And it was an expensive case. And the agent claimed that she had discussed a drainage inspection with the buyer, and the buyer chose not to do one. Guess what? The buyer wasn't telling the same story. That wasn't the buyer's recollection of the conversation. Mediator looks at our side of the table and goes, well, you had that conversation. Do you have anything in writing? Look at each other. No. You're not going to get far with your argument because you can't prove it. He said, she said. All we needed was this document. Where is it on there? Doesn't even have drainage on there. Somebody retyped that form wrong. It should have drainage on there. Well, anyway, all we needed was a form that would have said drainage was waived, and then we would have had our proof that the buyer waived doing a further inspection, because the whole case turned on that.
So if you're removing the inspection contingency, do you have the contingency removal form as this penalty?
These waivers should be signed prior to or commensurate with removing the contingency. See, we want proof of actual waiver of the outlined inspections. It's not enough to rely on a contingency removal form, because it doesn't spell out everything that's being waived.
Right.
See, a lot of times these cases we get in, most of the cases we get involved in are disclosure cases, and they hinge on advice given and whether we can prove or document the advice. And that's why we need these. That's why we need all this quote paperwork to protect us.
Do we have like a non-contingent disclosure that we could provide with people? Daniel said he's
it's in the market conditions advisory. The market conditions advisory talks about making offers without contingencies. That's one of the reasons that form was generated, is to address non-contingent offers, no appraisal contingency, no loan contingency. That's what it's meant to satisfy.
I have a question. So if my buyer removes the inspection contingency, but as we are in escrow, the buyer wants to do an inspection, do we submit the offer with this waiver?
No. Good question.
Can you repeat it just in case they didn't?
She want to know if the buyer removed the contingency and then want to do inspections. Do we include the waiver with the offer? Okay. This form, the buyer special election. This form, the buyer special waiver. This form, buyer special waiver. Those forms are for internal use only. They are not shared with the other side. They are for our internal use only. If you get an agent on the other side who asks for those documents, you do not give them. They are not entitled to them. You see a seller signature line on there? You see one there? There's a reason why there's no seller signature lines on those forms, because they're not given to the sellers. Okay, if you're writing an FHA or VA deal, it's required, part of the loan package, that the contract has to include an FHA VA mandatory clause, which says that the buyer, regardless of the status of the appraisal contingency on the contract, the buyer cannot be obligated to purchase the property unless it appraises for the stated price, which is the purchase price. However, the buyer can waive that if they choose and still buy the property. But you've got, this is required in the contract. If you don't include it in your offer and it's in the contract, as soon as the lender gets your contract, they're going to go, we need a mandatory clause, because they have to have it in their package. This is a notice and addendum about asking for repairs in the contract. The way they do the contract right now is it's as if we don't know whether any repairs are going to be required by the lender. So we're going to have a 17-day period to negotiate lender required repairs under an FHA or VA deal. And that's what this form is for. Now, I already know, and you should know, that if you're doing a VA deal, it requires a Section 1 pest control certification, and it requires a 1-year roof certification. They're required. So write them into your offer right up front. Don't make them a subject of negotiation later on. You got to, deal with it right up front. FHA no longer requires Section 1. They used to, but they don't anymore. So it's made FHA deals a lot easier. And this is a notice to the buyer to get a home inspection. And again, it's required for FHA transactions. Okay, this is the SIP, the SIP, seller license remaining in possession addendum. This is when you got the proverbial rent back. Well, it's not really a rent back if the seller is going to stay in the property after close for 29 days or less. Not 30, 29 days or less. If you're going to do a, quote, 30-day rent back, this is not the form. You use this form, which is 5 pages long. Because once the seller's in possession for 30 days, it's now a tenancy under landlord-tenant law. Less than 30 days, it's a license. And be careful on the possession fee, which is the equivalent of a security deposit. The contract, the document by default says that the possession fee is delivered to the buyer at close of escrow, or released to the buyer at close of escrow. That's the default in there. If you don't read the form carefully, you put, yeah, we'll have a possession fee of, $2,500. If you don't check the right boxes at close of escrow, that $2,500 is going to the buyer, and then the seller's got to turn around and fight to get it back. You want to check the box, make it have it held in escrow. Residence lease after sale, this is for a rent back of 30 days up to 60 days if the buyer is obtaining an owner-occupied loan. If a buyer is going to occupy the property and get an owner-occupied loan, the rent back cannot be longer than 60 days. Remember, an owner-occupied loan, the interest rate is anywhere from 3/8 to 0.5% less than a non-owner investor loan. The lender is giving you that better rate because they want you living in the property. And they want you in there within 60 days. I had one deal where we had a lender, it was HFC, and we got them to, rates were crazy then, we got them to carry the loan for my buyers. And they stipulated that they had to occupy, and the property was in pretty bad shape. They had to be occupying that property by day 61. And they said, we will do an occupancy check to make sure you're here on day 61. And guess who showed up at the door on day 61? HFC. Make sure they were living in that house.
Pick your next 3 favorite ones.
I'll go real quick. This is for the tenant staying in possession. We talked about the tenant already in the property. You need a tip. You got interlocking. This is for buyer prior to close. We do not recommend that. Buyer pre-occupancy storage. This is where you got a situation where the buyer wants to put their stuff in the garage. We don't recommend it, but that's a form to allow them to do that. This is if you want the terms of your offer to be ranked, terms of the offer or the identity of the buyers to be confidential, use this document. This is the Sbsa form. You don't have to include this with your offer if you are a member of the MLS or the same or reciprocal MLS as the listing agent. But if you're not a member of the MLS or reciprocal MLS, or you're modifying a commission, then you've got to use the Sbsa form and memorialize that. There's going to be an increased deposit. You need to make sure this form, the RID, is used. We had a case where we got sued for the increased deposit because we didn't have this form filled out. House the agent $16,000 out of their own pocket for not having that form.
Yeah. Did you go through city saying confidential one?
Yeah, you want past that. That's just if your buyers want the terms of their offer to kept confidential or their identity kept confidential, you use that document. Then the listing agent seller can't share it. Seller counter offer, pretty self-explanatory. So here's what I was talking about, where you add like statewide buyer sell advisory. I checked the box and I put it in right there. If it's going to be a multiple counter offer, then you make sure you use the seller multiple counter offer. Because in this form here, the buyer's acceptance does not constitute contract. The seller has the last say. If the buyer's going to issue a counter offer, they use buyer counter offer. There's going to be withdrawal of an offer, either an offer or a counter offer. You can legally withdraw an offer verbally over the phone, but you use this form to memorialize that phone conversation. You're going to do a backup offer, that's the form. You don't have to write it out on an addendum. You want to provide the seller with a nice, easy to read summary of the offer. There's this summary of offer form. If there's multiple offers, there's summary of multiple offers. You're going to do an extension of time. This is the contract. You're going to extend the close. Here's what I was talking about, this close date. What's it say? Extension of escrow. The scheduled close of escrow is extended to. It doesn't say close of escrow shall be or close of escrow to be. It says the scheduled close of escrow date. Big difference, because that date may move again. Extension of contingency or any other extensions or any additional terms. This is the document. You don't pull out an addendum form. There's a form already for most of this stuff. It's a lot quicker and easier. If you want a separate receipt for reports, here's a document to use for that. Request for repair. This is what buyer starts out a request for repair. Remember, the seller has no obligation to respond to this. Seller can thumb their nose to it if they want. Buyer still has to handle contingencies as required. This is the form the seller uses to respond to that repair request. You have to generate something new. There's your addendum form. But remember, people have lived before you. Make sure there's no form for what you're going to put down in that form. Okay. I almost wish that wasn't in zip forms because agents use it for all kinds of crazy stuff. This is a proposal to amend the agreement. As opposed to a request for repairs, you can use this to propose some terms, but it's not mandatory unless the other side agrees. Contingency removal form, pretty straightforward. Remember, your investigation contingency includes a physical inspection and all other buyer investigations. There's two parts, because a lot of agents still refer to that contingency as the inspection contingency. The inspection contingency is within the investigation contingency. Investigation is investigation of all off-site things, permits, school capacity, Megan's Law database, underground, fuel transmission pipelines, all these other off-site investigations you may want to do. That falls within that same contingency. Very important to know that. You're going to do a walkthrough prior to close of escrow to confirm that the property is substantially the same condition as the date of acceptance and that any contractually required repairs have been performed. That's to be done within 5 days prior to close. And you can memorialize the findings of that walkthrough on this form. If the buyer waives it, you check box 2. It says they waived doing final verification. Sometimes you got a vacant property, no repairs being done. You've been to the property a million times. It's like, you need to go see it again. Well, occasionally you will have a water leak. We've had them happen. So it's not a bad idea to check the property one more time before close, just to make sure there isn't an unexpected, unforeseen water leak, because we have had that happen. If the buyer's not performing on a contingent or contractual action, the seller can issue a notice to buyer to perform. Likewise, if the seller's not performing, the buyer can issue a notice to seller. If escrow is not closing in a reasonable time and one side gets impatient, they can, assuming they're performing, typically it depends on, this provides for seller or buyer. Assuming you're performing, you could issue a demand to close escrow. It states 3 days. The law says it has to be a reasonable time. So sometimes you have to look at the facts to determine how long is a reasonable time. 3 days may not be reasonable. Cancellation of contract. This is a 2-step process. It takes one party to cancel, but both parties have to release each other from all obligations under the contract, cancel the escrow, and agree to release the deposit. And we could go, I could spend 2 hours on that form. Okay. Our contract can be assigned, and this is the form you use to assign an agreement to another person. It's allowed. Don't see it too often, but it is allowed. And I think that's it.
That was it.
Thank you.
We actually, it took 3 hours because we started about 3:10. So
And we took a 10-minute
and
break.
take a break, right? So I didn't
Under 3
I didn't go way over. If you have any specific questions, feel free to email me, text me, and we'll answer them.